Welcome to the Daily Update. This is Being Prepared Tuesday, October 25th, where we'll look at the action in the market today and then see how things look for Wednesday, October 26th. And even though we're getting, as of yesterday, we were at kind of an overbought situation and we were dealing with resistance, well, we still had an up day anyway, but we're still dealing with an even more overbought situation and we're still running into what might be significant resistance. So things are turning a lot more positive, but it doesn't mean we're necessarily going to go straight up from here. Don't be surprised if we see some kind of a pullback. And just to run across something that I saw right before I started recording is that apparently Google came out with their earnings and they're not being all that well accepted. And the futures are down in the after hours. So that might lead to some kind of a pullback. But that being said, things are turning a lot more positive, and we ended up having another strong day. So let's go back and talk about what happened. We did have a higher open, and prices went up to R1 at 38.25, and then got all the way up to R2 at 38.52. As the day went on, we did see some declines, which is very common, but we were able to regain that momentum. We went back above R2 going into the close. So we closed pretty much at the high, just a little bit off of that. We were up 1.63%, and volume went back to above average. So that's a little more positive. Some of the advances we've seen recently, especially in Monday and Tuesdays or Monday's session, was that we were below average volume. Well, volume did pick up in that regard. And the technicals are turning a lot more positive. There's still a lot of headwinds. There are still some negative charts that I'll go through and show you. If you watch my videos for very long, you'll know that when we're going up, I'm looking for negative things. What could get in the way of the market continuing to go up? When we're going down, I'm looking for more positive things. What could help the market bounce from here? I kind of take that contrarian view as I'm analyzing things while still respecting what's actually happening at the same time. Inflation and interest rates are still the big concern for the markets, and we're going to be getting some more data later in the week to kind of help with that, or it'll help prices go higher or lower, make things a little clearer, or it could make things even more cloudy. We're never quite sure how all of that will work out. We do have the geopolitical concerns with Russia, Ukraine, and they're deploying the 101st Airborne into Romania. Not really sure what Russia is going to do about it at this point, but that's not really impacting the markets. It's impacting millions of people, but it could at some point, if this really starts to get more hot than it already is, it could have some impact on stock prices. Earnings are coming out. They're kind of in the flood stage right now. So we're getting a lot of different reports coming out. The Fed is on lockdown or silence mode or mute, whatever you want to call that, because of the meeting that's coming up. And then we're getting closer and closer to the midterm election. And you have both sides that talk about how they think they're going to win, how terrible the other side is. And it's typical. But I always like it when people say, this is the most important election of our lifetime. Well, today is the most important day of my life. I can't do anything about yesterday and I can't control tomorrow. Every election that's happening is the most important election in our lifetime. That's kind of how I view things. Let's go back and talk about some things that happened. One of the things that really supported stocks were we saw declining interest rates in Tuesday's session. So this gave a lot of support. And the economic reports that came out that I'll go through here in just a moment, they were weaker than expected and are showing that the economy is weakening. And so that brought interest rates down, which has helped stocks go up, at least over the last few days. The scenario that the Fed could take a less aggressive approach in December, that's continuing. Sorry, having to clear my throat. Love these take one videos. That is still seeming to be viable. Now, there's a lot of things that could happen between now and then. We have a whole Fed meeting. that will happen between now and then. And what are they going to say at this next meeting on November 2nd? How's the election going to influence things? And then all of the economic reports that come out between now and December. So this is the current running scenario, but it's always open to change at any time, and change in a positive way or in a negative way. Small caps and mid caps did pretty good on Tuesday. We saw them lagging behind a bit in Monday's session. Well, they actually did better than some of the other indexes in Tuesday's session. We have the 10 to the 5, the 10 to the 2, and now we're back to seeing the 10 to the 3 month. That's why I have it in gold right here. That is back to being inverted again, where the 30 to the 5, it is no longer inverted. So things are really jockeying around as far as interest rates are concerned. We're still neutral as far as sentiment. After the close, as I mentioned, Google's earnings report is being taken as negative. And I checked shortly before I started recording, and the S&P futures were down about 1% or so. Now, that's many, many hours before the market opens. So that's always, it will change whether they're going to get weaker or see some recovery. We don't really know. The reports that did come out in Tuesday's session are the FHFA housing price index. I don't know why I have a hard time saying that. It was down 0.7%, so we're seeing a decline there, and it was as expected. So there really wasn't a surprise that way. The S&P Case-Shiller Home report that we get every month, it came in at 13.1. They expected it to be higher at 14. The last time we got this report, it was at 16. So this is also showing how the housing market is really slowing down. Consumer confidence came in at 102.5, and they expected it to be higher than that at 105.5. The last time we got this, it was at 107.8. So consumer confidence is starting to decline, or it's continuing to decline. Our trend, we've actually turned over positive. The green line has crossed above the red line, and I'll show you that chart here. It's still weakening because they're crossing and those two lines are close to each other, but we're still above 20. Our bias continues to be positive. We had another strong up day, and our momentum is more positive now as well. So let's go back and talk about today's session. We're a little bit to the right of the neutral side of things. If we do keep going up from here, expect this meter to keep getting higher and higher. If we see a bit of a decline, then you probably can expect it to go back a little to the left. And this is just showing how things have really been improving since we were at an extreme fear reading not very long ago. Here's another sentiment indicator where we're seeing a lot of improvement here. It's still negative overall, but it's below, I should say above, the -1 standard deviation. So it's still slightly negative, but getting back more to a neutral reading. Here's another one, the Buffett indicator, which is what I try to go through when we do the current market evaluation in the weekly video. That I don't think they ever did update their charts. I went back and checked a couple of times. I wasn't able to do that part of the weekly video. But the Buffett indicator, which compares stock prices to GDP, it's saying that it's at a dot-com bubble peak. Now, how do you like that? Where we did set a bubble back in 2000, and then we saw the real decline after that as the dot-com bust happened. Well, we've come back down, and I'm not sure really what this necessarily means. We're just about at the same level. Where we peaked at this level in 2000, we're coming down to this level in 2022. So maybe there'll be some support off of this. If it breaks down below that, that could be a little bit more negative. Another one, this is the next 12 months earnings per share. Even though there have been a lot of revisions downward, they still remain high overall, and it can assist the bullish story in the short term. It's interesting to me that when we're going down and I go get these Isabel Net charts, if we're going down, the charts are more negative. If we're going up, the charts are more positive. It's just, you can kind of use that as somewhat of an indicator as well. But here we have the S&P 500 consensus next 12 months earnings per share estimates. even though they've been declining, they're still pretty high when you compare it to the current value of the S&P 500. And that's what we look at when we're looking at the forward PE ratio and the trailing 12 months PE ratio. How far are prices compared to what they're expecting earnings to be? So even though this is declining, it's still pretty high nonetheless, and that could give some support. Another chart, we're showing all of the flows going into equity funds. Even though it's declining, it's still pretty high. People still see the stock market as the best way, or one of the best ways, to generate wealth. Now, it means you're going to get hammered at times when things go down, but over the long term, the stock market really ends up giving folks a good return for those that are willing to put some money on the line to bet on the future of America. The next chart, we showed this just a few days ago, but this is showing how financials are really extreme and people have been taking money out of that. So is this suggesting that maybe we've bottomed? Financials have been improving lately overall. So we'll want to keep an eye on that sector as we do every day in the video. Then they're saying we're coming into more of a positive seasonality, the best 6 months of the 4-year presidential cycle. And it's from November, which will be coming up here next week, going to April in 2023. And the average return is around 15.2%. Now, that's the average. It could be higher than that. It could be lower than that. It might even be negative. So this is just what history has dictated, what typically has happened. Another chart, our overbought, oversold composite, where we got down to a pretty extreme reading and we're starting to show some improvement here. Right now we're at minus 29. And when it gets to this really extreme reading, that's when we use it as a contrary indicator. Then the flows are going into dividend funds. People are really frustrated. They're not getting a lot of capital gains in 2022. Their stocks are going down. So they're switching over to other types of stocks that pay dividends. And that just shows how there have been a lot of inflows into those types of stocks, especially when you're looking back over the last 2 years, where we were 2 years ago. And then this chart goes back all the way to 2010. Then here's another one where small caps trade at a discount to the S&P. We've been showing some charts like this. When you're looking at the forward look at the EPS, the forward 12-month, and then the S&P 600 relative to the S&P 500. The S&P 600, that's small caps. 500, that's what we focus on. That's more the blue chips. And so they're really undervalued at this point right now. And we're seeing a little bit of strength coming back into small caps, and that could give some support to the big caps. Looking at the Fed funds futures curve, where we still continue to go higher, where a week ago, that's the blue line here of what they thought we were going to be at some point, starting from now and then going up from here. And then here, kind of this purple line where they're suggesting that we may top out in April or May of 2022 at about 5%, thinking that that might be closer to the terminal rate where the Fed finally gets done raising interest rates. Then looking at sentiment, the RIDEX bear bull ratio, it's still pretty extreme negative. And you get a lot of folks, as I've been saying, that react. We have an up day, they get out of their bearish funds and get into bullish funds. We have a down day, they get out of their bullish funds and get into the bearish funds. And they're getting whipsawed back and forth. Now, they've been chasing what's been happening in the market overall, but we're still at a pretty high reading here. We did spike up, which shows that there was some pretty extreme fear. And even though this is improving, it's still a pretty high reading. So you still have most of these folks that are more bearish. Here's how we looked at things as far as growth versus value, where growth really outperformed in Monday's session with the large caps, mid caps, and in the small caps. So that helped our sector rotation a little bit, but we'll show the charts here in a minute. They're not really improving as much as you would think. As we continue to go up, the VIX has been coming down on a closing basis. We're coming down to this moving average, and we closed pretty much near the bottom of the bar on the bar chart. And as the VIX has been coming down, so has the VIX of the VIX. And this is getting kind of extreme on a closing basis now. Are we getting down here? Because you can use support, resistance, and trend lines and so forth with the VIX, just like you can with stocks. And maybe we're getting close to a point where this VIX of the VIX might be hitting support and bounce up, which may have an impact on the VIX itself, where it starts to turn up, and it tends to go down when it tends to go up when we're having down days. Then the Ulcer Index, I've kind of just dropped back to using the daily chart where we're dropping a bit below the moving average. And this pretty much lines up with our sentiment now where we're neutral and we're a little bit tilted to the right. So that means we're a little bit below the moving average. We're down 19.91% from the all-time high. And we actually saw a little bit of an advance with the equity put call ratio in the daily chart. It's still declining in the 5-period chart. Support and resistance, these have been posted on the YouTube community channel. This just gives you the resistance and support areas for Wednesday's session. Here's the daily chart. This is the resistance I'm talking about. We're coming back up to the 50-period moving average. We're also seeing ourselves a bit overbought, and I'll show you that as I go through the charts. When we see these two coming together, we have to be a little bit careful. We're still not quite up to this moving average, but we're getting very close, and we might hit off of this and come back down, showing that we're also overextended in some other areas. And then down at the bottom, we were above average with our volume. Here's some short-term fib levels where we were able to break through this double fib level. So that's pretty positive, but we still have resistance over where we're at right now, at least in the short term. Longer term, we were able to get back this double fib level right here. That's pretty positive. Can we stay above that? It was kind of concerning. We tried to go through this earlier in September, and then that's when we fell back down. Now we've been able to bounce back and actually close above that. So short term, we're looking a little better, but there's still resistance. Longer term, we're looking better, or more intermediate term, we're looking better as well. And then we also broke above the long-term fib retracement with our weekly chart. We're still well above the moving average, and this 50% retracement held up, and now we've closed above the 38.2% retracement. And that was at about 38.19. Those numbers are really hard to read on these charts. We're getting back up a little bit above the midpoint in our trend channel. Looking at the sectors, all the sectors were up, with energy being up the least because it's really been doing well lately. But real estate actually saw a bit of a recovery in Tuesday's session, and communication and discretionary. These are three areas that have just been getting hit really hard in 2022. Can we see some follow through to that? Now, looking at our scooter scores, energy is still looking the best at 99.5. Healthcare is also in the 90s at 94.9. Real estate showing some improvement, but it's still in single digits. And here's energy up over 52%, going back to the all-time high, followed by healthcare. Utilities are in third place. Communication, and that's where Google is. And discretionary and real estate. These are the areas that have been showing a lot of weakness. And then here's just an updated look at the indexes since the S&P hit its all-time high back in January. Technical alerts, I had to scrunch this up a little bit. They were all positive. This could also be kind of one of those non-indicator indicators. When you've got a whole long list and everything's positive at the same time, maybe we're overdoing it a little bit. Now, this could also give rise to, hey, we're going higher from here. So just an observation, just a way to think about things, where we had the S&P go above 3,800, and then we had a BPI across 50. I'll show you that later. And then a lot of this, the NASDAQ above 11,000, even Canada had a pretty good day going above 19,000. We're seeing a lot of BPI crosses above either 30, 50, and some of them are coming out of 20 after being pretty extreme negative. And then oil got back above 85, which you probably take that on a personal level as being more negative. And then the NYSE, the summation index, it crossed its 20-day simple moving average. That's a broad measure of the market. And so it shows that we're really expanding with things improving. Our scores, the Dow is still in first place, not up as much in Tuesday's session as it was on Monday's session, but we're still into the 90s. And then we have small caps looking a little bit better. They're at 84. Mid caps are at 79.5. We still have the S&P, which is in fourth place, but it's at 65.2 and showing some improvement. And then the Qs, they were way down. They were up again to a score now of 42.3. So as this line is going up, we're seeing their technicals improving. Intraday, here we had the higher open. We went all the way up to R1 pretty quickly. And then eventually we made our way up to R2. We stopped right there, fell back a little bit, came back up to R2. We're able to break through going into the close and then just closed a little bit off of the high. So pretty positive day. Our trend, the green line is crossing over the red line. And even though the ADX is declining, it's still above 20. So this is now switched over to a positive trend. But until these two lines get far apart, we're still going to see the ADX continue to decline. So if you use this to determine when we're trending and when we're not trending, you'll want to keep a real close eye on this chart. The Arun hasn't really improved all that much, hasn't really shown us anything. I was kind of thinking that if we broke out of here like we did, that this would really pick up on it. But no, it shows a decline in selling and a decline in buying. So the oscillator is going sideways overall. Looking at breadth, we saw another really strong update based on price and volume. We're seeing a lot of improvement here, but we're still underneath a declining moving average. The advanced decline ratio is going above the midpoint with both of these moving averages, so that's looking much more positive. New highs, new lows. We broke out a little bit, so we saw it's kind of an expansion of new highs here. And so looking at our 5 period, we are showing that things are more positive, and our 10 period is also advancing. We got back above the moving average, and if we can stay above this moving average with the accumulation distribution, that will improve things overall and turn the moving average back up. And see how we're right underneath this 50 period moving average currently. Short term is where we're the most overbought currently. Here's our moving average tree. We're above the 10, above the 30, above the 40, and we're coming right up to the 50 in our short-term rainbow. Rate of change going back 5 periods, we're looking a little extreme positive. 10 periods, we're quite extreme positive. And the Stoke RSI, extreme positive. Williams percent R, extreme positive. Force index, it really shot up. It's hitting the Keltner band here. So that is more extreme positive now. Swell trading oscillator, not giving us an extreme reading and still looking more positive based on price and volume. Our McClellan oscillator, it's giving us a pretty extreme reading. And our improvements in the 20, 50, and 200 still continue to happen, but we're starting to get extreme with the shorter term moving averages. Short-term stochastic, extreme positive. Intermediate term, getting extreme positive. Still looking positive with our longer term stochastic. Intermediate term, now we're battling with the 50 period moving average. The blue is the exponential. Let me just kind of flew right through that one. And that's important, but the one that's really important is the red one, and that's the simple moving average. There are millions of investors that use this to make their decisions. Can we break through and keep going up, or are we going to hit some resistance and fall back, or are we going to go sideways? And then here's our intermediate term rainbow, where we're starting to come back up into the underside. The first moving average is the 50. Then we have the 60, 70, 80, 90, and 100 that if we can continue to go higher, that would really help improve the situation. Here's our moving average tree. We're well above the 20s, and the 20s are turning up. We were able to get through the 50 exponential, and we're right at this green one, which is the 50 period simple. Rate of change going back 50 periods, trying to come out after giving an extreme negative reading. And our Sean trend meter is looking more positive. The PMO is advancing in and of itself, as well as based on price and volume. We're getting a little toppy with the PMOs that are rising. We're getting some extreme readings now with the buy signals, but we're showing improvement with those PMOs that are above zero. The Chaikin oscillator is above this dash line and advancing. That's positive. Chaikin money flow has switched over to positive and showing improvement. We are seeing kind of a gradual drop off in volume, even though Tuesday's session was above average. This is not real encouraging when we're seeing the market really going up and this going down, because this measures the intensity of volume. So you have a lot of really suspicious people because they have been burned at other times in 2022 as well. So that's understandable. That's why we look at more than just volume, even though volume is very, very important. The vortex continues to be positive. The green line's actually gone more positive, and the red line is advancing, or excuse me, declining. The summation index based on price is advancing and volume. All of our oscillators continue to be positive. The BPI, here's where it crossed above 50. And that, I kind of tried to point this out, where if we broke above this area that we were in, you would see the BPI really shoot up. And that's really what happened. And this is much more positive when we get back above 50. So intermediate term, we're looking a lot better. Short term, we're looking like we kind of might have overdone it there. And ease of movement after declining in Monday's session has turned back up after Tuesday's session. The ultimate oscillator is advancing. The money flow, it's kind of flat currently. The CCI 14 is getting extreme positive, as is the CCI 20. And our percent B, haven't shown this one in a while. This is when we get to the upper Bollinger Band. That means that we're moving pretty fast. So that means that we've gone up pretty quickly right now. And the TTM squeeze, we're coming right up to this 50-period moving average as we were looking at before. And we're looking at more positive where we have some pale blue bars currently. Balance of power still just about in the middle, but showing a little bit of improvement. It actually declined after Monday's session. And we might be getting a little extreme here with the CMB composite index. See how other times we kind of topped out at where we're at currently? Here's one I haven't shown in a while. This is a double exponential moving average based on 50 periods. That's the blue line. So it has a tendency to move a little quicker. The TEMA is a triple exponential moving average, and that tends to move a little bit slower, and we were crossing above that. What I wanted to show in this chart is we have an anchored moving average going back to the March 23, 2020 low. That was the COVID low. We're coming right up to that point right now, so this could act as resistance. Our different charts, Heikin Ashi showing improvements. The Kegi also turning more positive. The Renko has redrawn, and we have two open boxes. That is positive now. The three-line break is also positive. And we drew another X in the point and figure chart, and we generated a bearish signal reverse here that was generated in Monday's session. Or was it Tuesday's session? Recently. All right. And then the Elder Impulse continues to be positive, and we're right about at this. This is a 65-period exponential moving average, and that could act as resistance. And the SPY is a little bit above this moving average, but is still positive overall. The SAR continues to be positive because the dots are on the bottom. We're still more of a pale purple with the go, no-go system. Longer term, showing improvement with the 50-period study, 150 study, and coming back up and looking a little bit better with the 200-period study. The rate of change going back 200 periods, we're finally coming out of that extreme negative reading. Special K starting to turn up, but still far away from the moving average. But just the fact that it's turning up could be positive. Going back 250 periods, we're coming down, we matched the COVID low, and we're starting to bounce up from that. So longer term, things are still improving, coming out of an extreme negative reading, while in the short term, maybe we overdid it a little bit. So where the intermediate term is more mixed. All right, the diamonds are still positive, and they've broken above that 65 period exponential moving average. And the Dow, after coming back above this pivot level, is above its 50 period moving average. And this is the best looking chart right now, even though it's still in an overall downtrend. The Qs have not come up to this moving average yet, but they remain positive. NASDAQ 100, this is positive. We came back and were able to close above this pivot level. The Vixen is actually, yeah, it's continued to decline, and we're just getting crazy data with all these really weird readings here. But we're declining as the Qs continue to go higher, or the NASDAQ 100 goes higher. Here's the NASDAQ, able to get back above this pivot level. And the mid caps, right a little bit above their 50 period moving average. They held up better as we were going down. They haven't seen the explosive growth going back up, but their chart is still looking pretty good. Here's the Wilshire, also back above this pivot level, coming up to the 50 period moving average. So we're seeing a lot of indexes converging on their 50 period moving average at the same time. Now, it doesn't mean we're necessarily going to stop and go back down. It could mean that because we're a little overextended, but it would be really positive if we could close above this 50 period moving average everywhere that it's happening. Dow theory, where we're seeing the advance in the Dow, we're seeing kind of a muted advance of the transport, so they're underperforming right now. And utilities are also showing some improvement, but they're underperforming also. The dollar, because we've been seeing strength in stocks, the dollar has been declining, but it's still in an overall uptrend. And the S&P to the dollar still has a pretty strong inverse relationship. Gold was up about 0.25%, still in an overall downtrend. Silver, it was up over 1%, but continues to be in a downtrend. Oil bounced up a little bit to 85.32, and the S&P to the oil, it's working its way back to more of a neutral territory. So if oil starts to go back up and stocks start to go up, this line is really going to continue to go higher, closer to 1. Bonds up a bit here. They were up 0.95% based on price because interest rates came down. Saw a little bit of a bounce from our Pring World Index. And here's the kind of the changes with the yield curves. We're still inverted with the 10-year to the 5-year. We're not inverted any longer with the 30 to the 5-year. We are inverted with the 10-year to the 2-year. And here we slipped back down and we're just slightly inverted with the 10-year to the 3-month. That was kind of the holdout for a long period of time. It was inverted for 1 day last week. We'll see. Is it going to stay inverted for more than 1 day this week? The yields, after really spiking up, have been dropping when the 10-year, and it's coming back down here as well. The 30-year, after spiking up, has been declining. And here we're seeing where things are rolling over and some lines are starting to cross back over each other. But the 2-year is still giving you the best return. Looking at the correlation, stocks and bonds, they're kind of having a tendency to go in opposite directions, but this is floundering around. I pointed out in yesterday's video that maybe there's a rebalancing going on as the market might be shifting from a more negative stance over to a more positive stance, if that is in fact what's happening. So that's why we're seeing a lot of these relationships really go crazy at the moment. And here we're back to neutral with the S&P to the 2-year. S&P to the 10-year, also having a tendency to go in the same direction, but this is also declining. And the tech to the 10-year also same direction, but declining, which is odd. It's not what we were seeing on the way down. So are we shifting more if we're in fact going back up? Here's our updated charts for our possible positive scenarios. We're looking better based on price and volume. So this could be a valid signal that we're working from. Another valid signal is we're showing some improvement longer term with those stocks that are above their 200-day simple moving average. This does show improvement. Shorter term, 50 period with the S&P, this continues to bounce higher. With the mid caps, it's going higher, and with the small caps, it's going higher. So we're seeing some confirmation there. This is a longer look as well, with the 10-day average of the highs and lows of the S&P after giving us an extreme negative reading is showing some improvement. And we're still negative overall with the 5-period moving average of the highs and lows looking at the Amex, NASDAQ, and NYSE, but it is showing some improvement. After giving us a spike with the equity put call ratio, it is continuing to come down. So this is looking like it could have been a valid signal. The small cap index, it actually went above its 50-period moving average and closed right on the pivot level. And we saw a little bit of outperformance between the small caps and the S&P. That's why this ticked up. And so we haven't really created a new spike here on the red chart. We're working off of this other spike that was generated last week, which sometimes when this spikes up, after that is when the S&P sees some strength, and that's the blue line. We're seeing improvements with our sector rotation, but not necessarily what you would think, at least yet. The Qs are coming back up to the moving average when compared to the S&P, discretionary, ticking up slightly, and large cap growth against large cap value is trying to cross over the moving average. Seeing some improvement here with the large caps, mid caps, and small caps. But we're going to need to see more follow through if things are going to shift back more positive. This has been positive and has been a good signal for us, where we have been going up with the S&P to utilities ratio. And as this has been advancing, the S&P has been advancing. We don't know about this one, though, because we don't know if this is a spike. The 2-year did come down slightly in Tuesday's session, but we don't know if it's topped out here or it's going to turn around and keep going higher. The staples are showing some improvement. They're coming right back up to their 50-period moving average, even though they are in a downtrend. And on a comparative basis, we're actually declining on the ratio between staples and the S&P. So this spike right here still looks to be valid. Copy curve. After giving us this signal, we're seeing some follow through, as well as with the Pring bottom fisher. Might be getting a little toppy here. This could be kind of an extreme reading. Other times when the Pring bottom fisher got to this point was when it started to roll over. So we want to be aware of that. So what's our outlook then for Wednesday? The technicals are turning positive, but they're becoming overbought, especially in the short term. And we're hitting the resistance, specifically the 50-period moving average on lots of different indexes. We have the weekly MBA mortgage index that'll be coming out. Advanced goods trade deficit will be released. The advanced retail and wholesale inventories. New home sales, that's probably the biggest that'll be coming out. And then the whole list of geopolitical events, the potential escalation of things between Russia and Ukraine, not impacting the stock market currently, but that could always change. Inflation and interest rates are what the market is really fixated on. And then we've got the whole midterm election is getting closer and closer. That may or may not have much of an impact, but things have turned so political now culturally that it could bleed through into the stock market. So our scenarios can't really go with the down one now. We're still looking pretty positive overall, but we are overbought in the short term and we're possibly at resistance. So that might suggest that things could fall back. We're looking a lot better with the up scenario because we're seeing a lot of improvement, but we're overbought and possibly at resistance. So that could get in the way of the up scenario, at least in the short term. And then if that does happen, if we see a pullback, we're going to be looking to see how powerful is that pullback. You remember when we went up and hit the moving average before and just turned quick and started going down fast? Is something like that likely to happen this time, or are we just going to kind of stall out before we get ready to push higher? And we can't really go sideways right now. The ADX, it's turned over to being positive, and it's still above 20, even though it is weakening. So our conclusion, the S&P, it's positive, but becoming overbought. And in the short term, we're overbought. Intermediate term, there are areas where we're overbought and hitting resistance. Long term, we still continue to be negative. So thank you. Have a great Wednesday. we'll look things over, and then I'll see about putting out a full-length video for Thursday. If we have a sideways go nowhere day, I may just do a daily brief. I just kind of decide that on a day-by-day basis.